This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And happy Monday, everybody. Good afternoon, live on Bloomberg TV, radio, YouTube, Bloomberg Originals. It is Bloomberg Businessweek Daily. I'm Tim Stenivek. That is Emily Graffeo. She is in this afternoon for Carol Massar. She's from the Bloomberg News credit team. Emily, I'm looking at equity markets, and we're seeing stocks higher now than they were earlier. This after President Trump said that U.S. talks with Iran are continuing at a rapid pace. He added that Israel and Hezbollah agreed not to attack each other.
That's right. We're also seeing a little bit of a rally in the bond market, at least just relative to what we had seen earlier in the day. So maybe going slightly more risk on those headlines, Tim.
Well, that's exactly where we're going to go. And we're going to have more from Amy Morris on the trade in just a minute. We're going to be covering the latest out of the Middle East, the back and forth, the mixed signals, what we're hearing from Washington, what we're hearing from the region too. Galit Altstein, who covers economy and government for Bloomberg News, is standing by in Tel Aviv. And then on the equity trade, David Bianco is here from DWS.
He's joining us very soon. And as far as that equity trade goes, tech is one of the few bright spots today, at least strength in the NASDAQ 100. Nvidia is rallying along with Microsoft, Dell, and others. Ian King from Bloomberg on what Jensen announced today in Taiwan.
And calling Dr. Copper, a deep dive on the metal with the chairman over at Copper Intelligence. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Amy Morris is standing by. She's in for Charlie Pellet. Hey, Amy.
Hey, Tim, you're absolutely right. President Trump talking about Israel and Hezbollah agreeing to dial back those attacks and to stop shooting at each other in Lebanon. Trump says he spoke with Prime Minister Benjamin Netanyahu and representatives from Hezbollah in separate phone calls, and that there will be no troops going to Beirut. And Iran said earlier it would suspend negotiations with the U.S. in protest over Israel's offensive in Lebanon, also threatening a complete closure of the Strait of Hormuz. But the president says those talks with Iran are ongoing. That has oil off its session highs. WTI now just over $91 a barrel and Brent crude near $94 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is now up 0.4%. NASDAQ up 0.7%. The Dow little changed on the downside. 10-year Treasury yield at 4.46% and the 2-year yield at 4.04%. Manufacturing activity in the U.S. expanded in May at its fastest pace in 4 years. That was bolstered by a pickup in new orders and production, adding to speculation that the Fed is going to keep rates higher for longer. Barry Diller made an offer for the remaining portion of MGM Resorts that he doesn't already own through his business empire People, which expects to fund a transaction with a combination of cash and additional debt and equity funding commitments, and expects to own just over 50.1% of the equity of the company. MGM Resorts shares 16% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Emily Graffeo and Tim Stenivek.
Amy, thanks for that. Do appreciate it. Well, Wall Street traders, as we just heard from Amy, sending stocks higher. Oil pairing its rally. This after President Trump said U.S. talks with Iran are continuing at a rapid pace. He added that Israel and Hezbollah agreed not to attack each other. The president also said that Israel and Lebanon agreed that all shooting will stop. President Trump said in a social media post. The president, or rather Iran, had earlier said it would suspend talks in the exchange of documents through mediators in protest for Israel's assault on Lebanon. That was according to Tasnim, and Tehran warned that it could target northern Israel if the attacks continue. That's according to the semi-official Iranian Students News Agency. We're going to talk to Galit Altstein in just a minute. She's Bloomberg News economy and government reporter. She's out there in Tel Aviv. We're working on her signal. In the meantime, Axios also reported that the Speaker of the Lebanese parliament told the U.S. on Sunday that Hezbollah is ready for a full and immediate ceasefire with Israel. I think the question that a lot of people have, Emily, right now is, what piece of information do you trust? The president is out there on Truth Social saying certain things on his social media platform about the talks continuing between the U.S. and Iran. And then the other side, you have, Iran saying, we need Israel to essentially stop what it's doing in the region in order for these talks to continue.
Right. At least for the market, the equity market took this as a positive signal, a signal that we're getting one step closer to a potential deal between the U.S. and Iran. And it was interesting to see that, you came in earlier this morning, equity market down, people leaving U.S. treasuries, and it's reversed a little bit just on like a small update like this, Tim.
Yeah, I'm looking at oil too, and that's really also what's driving this. It's still higher today on the day. WTI up more than 5%. Brent up right now more than 4%. I do want to go to Tel Aviv now and bring in Galit Altstein, economy and government reporter for Bloomberg News. Once again, she does join us from Tel Aviv. Galit, can you help us make sense of what signal is the one that we should be listening to?
Yeah. Well, let's try to figure that out together. So things have been happening very quickly here today over the past half a day or so. So this day started out with Benjamin Netanyahu saying that Israel would ramp up its military operations in Lebanon against Iran-backed Hezbollah. And he said that Israel would be attacking in Beirut, the southern suburbs of the Lebanese capital that have been off limits for Israel since about mid-April, when President Trump basically said that the Iran ceasefire would be copied to Lebanon. Since then, Israel has not been attacking in Beirut. Now, the IDF, the Israeli military, hasn't acted on this threat from Netanyahu. And this evening, it's just past 9 p.m. here in Israel, we've been hearing that Netanyahu and Trump have spoken over the phone, and that Trump, he actually also posted this on Truth Social, has once again declared a ceasefire in Lebanon, saying that Israel and Hezbollah will no longer be attacking each other, and that no Israeli troops will be attacking in Beirut. And if any troops are on their way, they were already been turned back. So that's what we're hearing this evening. If you're asking what the signaling is, I would say that at this point, although we've not yet heard anything from Netanyahu, it does seem like things are going toward a ceasefire, but we do have to say that with caution and see what happens on the ground.
Yeah, Galit, just bring us up to speed, too, on just how much of a development we're now seeing between Israel and Lebanon, because as you had reported over the weekend, basically just 2 days ago, this was the broadest incursion into Lebanon in a quarter century, Israel's ground assault in Lebanon. But now it seems like things have shifted quite a bit.
Yeah, that's correct. So just to go a little bit back in time to put things into context. So when the U.S. and Israel jointly attacked Iran at the end of February, Iran-backed Hezbollah in Lebanon was quick to retaliate on behalf of Iran against Israel. So throughout March, there was ongoing back and forth fire between Israel and Lebanon, and that exceeded the April 8th ceasefire in Iran. So what happened then was that Israel kept going in Lebanon. At some point, as I just mentioned, in mid-April, Trump said there's going to be a ceasefire there also, there meaning in Lebanon. And basically, since then, we've seen that ceasefire crumble. That peaked over the weekend, as you just mentioned, when we saw the Israeli military, the ground forces, go deeper north into Lebanon. If at first they were kind of taking hold of this security parameter about 8 or 9 kilometers into Lebanon and then up to the Litani River. They had crossed that river and had taken over a ridge called the Beaufort Ridge. And that was the deepest incursion in 25 years. And that was just 1 or 2 days ago. Hezbollah retaliated with very heavy bombardment, heavier than usual, toward Israeli communities, mainly in Israel's north. So that's what we've been seeing over the past few days. And that brought Netanyahu to threaten with attacks on Beirut today. But as I said, just less than 12 hours after he threatened with these attacks, Trump comes out and says, we're going to see the end of attacks or a ceasefire, although he did not use that specific word.
All right, we are up to speed on at least everything that has happened thus far. Galit Altstein, we're going to let you get to bed. We appreciate you staying up late and joining us here on Bloomberg Businessweek Daily. Galit is Bloomberg News economy and government reporter joining us from Tel Aviv. Well, traders glued to the latest signals out of the Middle East and Washington. After all, as David Bianco points out, the geopolitical stakes right now are high. He's America's CIO at DWS. It's one of Europe's largest asset managers, more than $1.1 trillion in assets under management. He joins us here in the Bloomberg Businessweek studio. We had planned to talk about earnings and AI CapEx, and we're going to get to those things. But I want to kind of start where we left off with Galit just now and hear from you about the inflationary view. Because I think at the end of the day, that's what this is about. This is about inflation expectations, energy prices, and when that Strait of Hormuz gets open again.
Thanks for having me. I mean, all investors, including myself, are keeping an eye on the Middle East. We're at the stage where seeing actions is a lot more important than announcements and words.
But announcements and words are still moving markets.
They still are. But we may be running out of some scope for that, because while I understand that disinformation is a part of any conflict, and if, it's important to hold out olive branches, but if saying that we're closer to a deal gets oil prices down $10 a barrel or takes yields off the boil, fine, but we are going through our strategic reserves pretty quickly, and the bond market may be losing some of its patience as well. Now, the equity market is more focused on tech. We'll come back to that, but I am looking at this conflict from, look, conflict is expensive, conflict is inflationary, conflict is a signal of maybe this world being less cooperative than it used to be. That weighs on productivity, and that weighs on potential for growth as well. So, yeah, gas prices are important. The deficit's important. American service lives are extremely important, but the stakes are extremely high here. Many are watching, particularly those out of Russia. And I think China is still more of a friend than a foe. But this is no time for the U.S. to seem as if a little bit of an expensive price at the pump and fear of our own democratic process of midterm elections. These aren't reasons for the U.S. to back away from what hopefully is a good deal. And there's still time for a good deal, but it should be a good deal, because if Trump and the Republicans for the midterms or Americans or our allies should fear anything, it should be a bad deal.
What is the portfolio trade then, if there is any, based on that setup of the conflict in the Middle East?
Well, we're still watching this conflict with a little bit of skepticism that this gets wrapped up quickly and we go back to, as I said, movement or actions and movement of ships out of the strait, and a big decline in oil prices and peace in the Middle East. We're skeptical of that. Mm-hmm. So until we see something more concrete in that front, we're sticking with where we see unquestionable strength, which is the tech trade. We're moderately overweight tech and communications because that is the large part of the S&P. So often the question put to us, what else can we do to diversify? Mm-hmm. And we've got some other things. We talked late last week with Chris Kennedy, who leads economic statecraft at Bloomberg Economics, and he keeps going back to the JCPOA mm-hmm. and the so-called Iran nuclear deal. And when you say that Americans should be more worried about a bad deal than sort of, and I don't want to put words in your mouth, but my interpretation was then waiting for a good deal. Mm-hmm. I think a lot of people out there are saying, wait, what does a good deal look like? Especially if the uranium enrichment question is a can that is kicked down the road. All right, what a good deal looks like is something that suggests Iran doesn't want to militarize the region. To debate whether a country should have nuclear weapons, I'm not sure they've earned that trust from the world. I don't think so. But, this is a country that, this is a big topic here, that has used revenue from oil or other, agreements, deals on freezing assets, being able to sell oil to certain markets. And it's helped them, it's largely what's allowed them to fund a lot of chaos in the region. So these are, you got to judge everybody by their track record, investors as well as geopolitical actors. Their track record's very poor. So take your time, and let's not take words, and let's make sure that the U.S. Keeps its options fully open.
We saw a bit of a sell-off in the Treasury market this morning. It's come down a little bit in terms of rates. I think the 2-year was up like 7 basis points. And the longer into on potentially this idea of inflation staying higher for longer, how much does your tech equity optimism hinge on rates staying relatively under control?
As far as the equity market goes, the part of the equity market that's probably most resilient to higher interest rates and yields is tech. The debate at tech isn't what is the cost of capital. It's what's the return on capital going to be about all of this CapEx. We don't really have too much concern about whether the cost of capital on a weighted average cost of capital is 5.5% or 6.5%. We want to know, is this going to be a return on capital below 5%, above 10%? That's the uncertainty. It's the return on capital. It's the other parts of the equity market that, if you take a good look, are sporting pretty demanding PE multiples up against this interest rate environment that we're in. So we're a little bit concerned about certain bond substitutes, staples or REITs even, or telecom. But there are many parts of the S&P 500 that are not delivering the kind of earnings growth and outlooks that tech has been delivering. They deserve their PEs. Their PEs have been shrinking upon the earnings deliveries. The rest of the equity market, it's still an above 20 PE on general, excluding tech. That's what's a threat to if yields go higher, even at these yields.
On tech, our team reported, and Anthropic actually announced this earlier, that the firm has confidentially submitted draft paperwork for a public listing. It's potentially leapfrogging longtime rival OpenAI in the race toward a Wall Street debut as soon as this fall. So this could be an IPO of a company worth $1 trillion. Same with OpenAI. Same SpaceX, $1.8 trillion. We'll see what happens. Right. Are you going to buy into those companies when they go public?
That's for my team to decide. I manage a whole team of portfolio managers across growth strategies.
Have you given them a mandate at all yet?
Well, we're still looking to see what the pricing is and see how the market receives these. I don't have any comments about what we will do, but we're certainly intrigued by all of this, from not just the size of these IPOs, but this is going to empower companies and people like Elon Musk to pursue their ambitions. And we know his greatest of all ambitions is space exploration, Mars, and so forth. So, probably what we'll hear more about is the space economy, the launch economy, data centers in space. Nothing's going into space unless it's launched up into space. But just think about the capital that's being raised and the wealth that's been achieved of these companies. Some of them are tapping debt markets. Some of those companies you mentioned may be doing that in the future as well. So we're talking about a huge allocation of resources. And whether you think it's a good allocation or not, we'll debate that over time. Just as we see the bottleneck or the CapEx plays on AI, think about what are the CapEx plays on the space economy and launch economy.
Right. And your note from a few weeks ago, data center CapEx, $600 billion expected.
Just the U.S.
Just in the U.S. That's incredible. Just in the last minute, what's the best way to invest in this AI build-out trade?
Well, there are a lot of ways. And I do believe that the main hyperscalers are going to get good returns. And that these are attractive businesses. But people keep asking us about the tech hardware, semiconductor plays, and where I would say that what you see going on in the United States is going to happen in China. The other part of the world where I think you'll get huge data center investment building is the Middle East. We need a little bit of peace there, but I think that's going to be coming. And those regions are still going to be dependent on a lot of Western semiconductor equipment to get that done. And that's just for an example. There's names like AMAT, Lam, KLAC, but ASML. People forget about some names out of Japan, like Tokyo Electron. China will use its own cooling equipment, its own electrical equipment. They may even design some of their own chips and still probably need Taiwan Semiconductor to make most of them. But the point is everyone's going to need a lot of this key semiconductor equipment from the West to build this infrastructure around the world.
David Bianco, America's CIO over at DWS. Coming up next, we are talking Dr. Copper.
It's 2:21 on Wall Street. I'm Amy Morris. President Trump says the U.S. and Iran are still talking and that Israel and Hezbollah have agreed to dial back fighting. Iran had said it would walk away from the talks because of Israel's continued strikes in Lebanon. But President Trump says he has spoken with Israeli Prime Minister Benjamin Netanyahu and representatives from Hezbollah in separate phone calls, and that talks with Iran are continuing. That has oil paring back gains. WTI crude now less than $92 a barrel, and Brent crude now less than $95 a barrel. And we do check markets for you all day long here at Bloomberg. The S&P 500 is now up 0.5%, NASDAQ up 0.7%, and the Dow out of the red, now a little changed on the upside. It's about 25 points higher. 10-year Treasury yield at 4.46% and the 2-year yield at 4.04%. Anthropic has confidentially submitted draft paperwork for a public listing as it races longtime rival OpenAI to make a Wall Street debut as soon as this fall. Anthropic recently raised $65 billion in a funding round at a $965 billion valuation, including the investment, eclipsing OpenAI's value for the first time. Anthropic and rival OpenAI have been one-upping each other in recent months as they both pursue those public listings. Berkshire Hathaway will acquire Taylor Morrison Home in an all-cash deal worth about $6.8 billion. That deal is expected to close in the second half of this year and will unify Berkshire's site-built home building operations into a combined platform. Shares of Berkshire Hathaway now about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Businessweek Daily with Emily Grafeo and Tim Stenovec.
Hey, thanks, Amy. Do appreciate that. Shares of Nvidia rising as much as 6.3% today. Best day going back to February. Shares of ARM surging close to 20% to a record high earlier in the session. This after Nvidia announced a new chip for PCs. It's aimed at loosening the stranglehold of Intel tech in that arena, modernizing the machines for the AI era. So starting this fall, NVIDIA's new RTX Spark Superchip will debut in laptop and desktop PCs from Dell and Lenovo Group. That's according to Jensen Huang, who talked at the Computex trade show in Taipei. Here he is a little earlier today in Taiwan.
The developers are so excited about it. This is an incredible computer. All of the acceleration, all the software capabilities associated with it, working with every developer to make it incredible for all of you.
That was Jensen Huang just earlier or overnight at the Computex trade show in Taipei. I want to bring in Ian King right now. He is Bloomberg News U.S. semiconductor reporter. He joins us from our Bloomberg News Bureau in San Francisco. Ian, I have so many questions. I'm glad we have a good chunk of time with you right now. We're seeing shares of Intel lower on this news. We're going to talk about that relationship in just a second. But my first reaction to this, and NVIDIA is a company that goes back to the 1990s and that Denny's. And wasn't it originally a company that gained notoriety for the GPUs in PCs? Isn't this a return to NVIDIA's DNA?
To an extent. You'll remember that its GPUs essentially have always worked in tandem with the CPUs, the central processing units, from Intel or to a lesser extent from AMD in PCs. So, NVIDIA's had a very strong brand in PCs, but on the graphics end. If you're a gamer, if you like, killing things in the virtual world, you love NVIDIA because it allows you to do that in better definition than anything else.
So then how is the announcement today related to what NVIDIA has been doing for more than 30 years?
Right. I mean, it's using that brand, the GeForce brand, to extend its reach in PCs, to say, hey, look, this central processing unit, which has really been Intel's domain for a very long time, we can do that too. And we can use this mobile phone architecture, this ARM architecture, to do that. So we're going to have lower power, better performance, and we believe we're going to have a compelling sort of offering in the PC era.
And Ian, why get back into PCs now, particularly when this is a time that NVIDIA is dominating in the data center world?
Yeah, no, that's a very good question. There are a couple of elements to that. On the one hand, it's not that exciting, right? I mean, you're thinking about $100 ASP, couple of 100 million units, maybe you get 20, 30% of that, compared to your data center where some of your parts are going at $30,000 a chip. Doesn't sound as exciting, but what NVIDIA is anticipating here is that the use of AI is going to spread, that for it to really connect with the consumer and really become pervasive in the economy, that it's going to be part of devices that we touch every day. And obviously, outside of the smartphone, the PC is a device that most people use on a daily basis to sort of compute.
You know, I'm just looking at shares of Qualcomm right now, because Ian, when you're talking about shares of Qualcomm down 8.5% today, what you're describing to me is what the folks who from Qualcomm come on our program and say is the so-called AI PC, and this is what they've been talking about with regard to Snapdragon for the last few years as they've joined us on our program. Is this is the AI PC? That's the promise?
100% exactly the same thing. Microsoft has been looking for a chip partner that would get it into this particular realm of laptops for a while. Obviously, this is something that Apple has already done with its own in-house silicon. So we're talking making devices that are really sleek, run for a long time on one battery charge, and also are very powerful as well. And Microsoft has been out there looking for partners to do that. It's tried with Qualcomm. We've had some really nice devices, stuff that I've had to go at that's been absolutely fine, but it's just not caught on with the consumer. And now we've got Nvidia coming, so we've got the money, we've got the industry expertise, and we've got a brand as well that counts for something in this area. So we'll see whether that makes a difference or not.
So what do we as normal human beings do on AI PCs? Emily and I, just a few minutes ago before we came to you, we were talking off mic about this. And she was saying, she's an OpenAI person, ChatGPT person. I'm like, I'll just switch between Claude and OpenAI and Claude and ChatGPT. Increasingly, I'll use what Google offers when you search for something with Gemini. What do we who just talk to chatbots like they're search engines? What do we do with an AI PC?
Yeah, no, that's a very good question. And I think what we've got is promise, and arguably not really delivering on that promise right now. I mean, as Nvidia pointed out, throughout its history, you've been typing or you've been clicking with a mouse and looking at a screen. That's how you interact with a PC. That's, fundamentally you're calling up a piece of software and then you're asking it to do something based upon some typing parameters that you give it. Arguably with AI, assuming that it progresses along the path that we've been told it will, you'll be interacting with that computer in a much more dynamic way. Obviously, you'll be speaking to it. And that speaking to it isn't just a voice to text. It's telling the computer, hey, this is my intention. This is what I want to achieve. Go off and do it for me. So then your computer doesn't just recognize the sounds you're making as text and do what it's always done. It then does more things, such as calling up various programs, having them interact together, and giving you a solution, giving you an outcome that you might have taken several steps with a keyboard and a mouse to achieve. And we got examples of that given to us yesterday.
Oh, talk about some of those examples. I'm curious to hear about that.
Yeah, I mean, the big example that they gave was with Adobe, with Photoshop. Right now, for example, you've got a sketch that you upload as an image into Photoshop, and you think, I want to make this look realistic. So then you have to, go and color it in and choose color palettes, choose shadings to try to make it look realistic. And then you think, what it looks like from a different angle. Can I rotate it? Can I fill it out? Can I make it a 3D image? And then, maybe I want to animate it and have it move around naturally. And what they showed was a version of Photoshop and other Adobe tools where you basically just told the computer that that's what you wanted to do, and it happened. Whether that is really practical and whether that happens as smoothly as they showed, we'll see. But that's the kind of idea that we're getting at here.
For those just tuning in, we're speaking with Bloomberg News U.S. semiconductor reporter Ian King, who's in the San Francisco bureau at Bloomberg News. So, Ian, I do want to pivot for a moment here because we're seeing ARM holdings at a record high. What's at stake for ARM given this new Nvidia chip?
Yeah, Nvidia is one of the biggest licensees of ARM technology. You'll remember ARM provides either designs and licenses to use what's called an instruction set. The instruction set is the code that a chip uses to communicate with software. Because Nvidia is a big licensee, this new chip that it is producing will basically use ARM technology, so therefore ARM gets a cut of every chip that's sold. It gets royalty revenue. So just on a very instant basis, that's good for ARM's revenue. But on a broader basis, it's affirmation that this ARM technology that Qualcomm is using, that Apple is using, has a broader role to play in PCs, that there's now a really, really big company putting some effort behind that, and perhaps, this nascent effort that's really been going on for more than a decade is about to take flight.
So ARM is higher today, Nvidia is higher today, Qualcomm is down as much as 8%. I go to Intel, it's down 4.3% right now, Ian. And when I think of Intel, I think, hey, congratulations to Emily, to you, all these taxpayers here who are shareholders of Intel. But I also think on the Bloomberg terminal, I type in HDS, and I see that the fourth largest shareholder of Intel, you know where this is going because I saw you grin right there, is Nvidia. Nvidia, thanks to that investment last year, owns more than 4% of Intel. How do you explain a move like this going into Intel's turf, but also being one of the largest shareholders of the company?
Yeah, I mean, as you'll remember, there are two sides to the Intel story, and Intel has increasingly differentiated them. There's the one part of the business, which is Intel goes out and designs chips and then manufactures those chips. So that would be the PC chips that Nvidia is going to compete against. The other side of Intel's business is what's called a foundry, which is, hey, we've got all of these factories. We can't fill them ourselves anymore with our own designs because we're not as big a company as we used to be. Why don't you give us some of your work and we'll do it for you? So there's kind of a duality there inside Intel. So this is a blow, but if Intel down the line can become a provider of manufacturing for Nvidia, then maybe that's a good thing.
That's a good point. And I guess to be fair, Intel, even with today's decline, is still up close to 200% so far this year. Ian, where does it leave a company like Apple and what technology Apple offers in its PCs?
Yeah, I mean, there's a kind of an overlap between Apple and Nvidia here in that, both companies like to definitely paddle their own canoe. They like to have absolute control of what they're doing, and that's what Apple's success has been built upon with its silicon program and this fundamental architecture, which is low power, high performance. Nvidia is coming in on that and in theory arming the Microsoft Windows world to have similar capabilities. So we'll see how that plays as a competitive threat against Apple, but undoubtedly this is an attempt to do so.
Ian, we got to run, but we appreciate you talking about this with us for such a long time this afternoon. We had a ton of questions. You answered all of them for us. Ian King is Bloomberg News U.S. semiconductor reporter joining us from San Francisco. Check out Ian's story and more on Nvidia, on ARM, on everything within this ecosystem on the Bloomberg terminal and at Bloomberg.com. Looks like, Emily, we're still seeing stocks higher, though the majority of stocks in the S&P 500 are actually lower today, even though tech is a bright spot, up about 0.5%, the S&P is.
Do you know what else is higher today?
No.
Copper.
Okay.
And we're going to talk about that next.
I was like, I could have gone a few different places. That's next on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. I'm Amy Morris. President Trump says Israel and Hezbollah have agreed to stop attacking each other in Lebanon after fresh violence threatened negotiations to end the Middle East conflict. Trump says he spoke with Israeli Prime Minister Benjamin Netanyahu and representatives from Hezbollah in separate phone calls, and that talks with Iran are continuing. Iran had threatened to suspend those talks with the U.S. in protest over Israel's offensive in Lebanon. Trump's announcement moved oil off its highs for the day. WTI more than $92 a barrel. Brent crude right around $95 a barrel. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.4%. NASDAQ up 0.7%. And the Dow is little changed on the upside. 10-year Treasury yield at 4.47%. The 2-year yield at 4.05%. Nvidia shares more than 6% higher and ARM shares 16% higher after Nvidia announced it is entering the PC market with a new chip. It is the RTX Spark Superchip. It's expected to loosen Intel's stranglehold in the arena and modernize machines for the AI era. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Emily Grafeo and Tim Stenovec.
Well, thanks, Amy. Copper advanced in New York and London to kick off a crucial month ahead of the Trump administration's deadline to make a fresh determination on launching U.S. import levies. In the meantime, Goldman raised its end of the year copper forecast by more than 10% as it sees U.S. stockpiling and weaker than expected mine supply keeping the market tight. Its analyst wrote in a note that copper will finish 2026 at $13,735 a ton versus a previous forecast of around $12,465 a ton. So we're curious what Andrew Groves is seeing right now. He's chairman of Copper Intelligence, which focuses on mineral exploration and acquiring and developing high-grade copper assets in the Democratic Republic of Congo. He joins us here in the Bloomberg Businessweek studio. Thanks for joining us, Andrew. How are you?
Very well. Thank you very much for hosting me, having me here. First time, but
yeah, welcome.
It's interesting.
So let's just start kind of high level about where you kind of see the forces driving the copper market right now and how AI plays into all of that.
I think there's a number of factors driving the market, and you've got to start with the supply issue always. And, over the last 10, 20 years, you've had a dearth of mining investment in the source of raw materials, whether it's existing mines upgrading the mineral reserves or finding new deposits. And then so there's been a complete lack of that. And then you have the existing mines. Mm-hmm. A lot of them, especially in South America, have declining grades. So if you look at some of the mine grades in Chile in that you're running at 0.9, 0.7, 0.8%, that means you've really got to move 100, 110 tons of dirt to produce 1 ton of copper. And how much does it cost to move that 100 tons of dirt when you look at fuel costs, human costs, vehicle costs, etc., etc.? So you've got that issue in the supply side. And then obviously on the demand side, you've got these hyperscalers requiring 50,000 tons of copper per unit. So you multiply that over a whole series of hyperscaler data centers being built out.
In terms of regions of the world where you are most bullish, is it fair to say it would be DRC?
I'm very bullish on the DRC on the basis it's very, very underexplored, and historically it's been in constant conflict.
Which is why it's probably underexplored.
Correct. And the new government under Felix that's coming in his second term, where he's not in a coalition with Kabila, he's done an exceptional job. There's a lot of investment going in the country, roads being built. You go into Kinshasa, there's a lot of infrastructure being built, buildings, and a lot of mining investment. You had $32+ billion of mineral exports last year, the highest ever for the DRC, and it's on track to do probably in excess of 50 billion this year. So a huge amount of investment in copper. But what's exciting about Congo is the copper grade. So if you look at the average grade in Congo is running 2, 3, 4, some deposits 6%. Means you've got to move a lot less dirt to produce the same ton of copper than you do in a lot of these South American jurisdictions.
How do the customers of the buyers of copper, how do they access the copper? Is it a market where there's still, I guess, more demand than there is supply, and it's getting even harder?
At the moment, demand exceeds supply. I mean, even going into this year, I think you're going to have a 400,000 ton shortfall. Mm-hmm. And I see the banks, they're targeting 13,800 at the year end. Sort of my own prediction would be more on 15,000 tons.
Oh, wow.
So you saw Codelco recently announced 20% reduction in supply. I'm not sure if Grasberg has fixed its issues in Asia. So, and with the demand going, where's the supply coming from?
Mm-hmm. You mentioned the history of conflict in the DRC, and it's also right now in the news as a result of what's happening with Ebola. And I'm curious about how that affects, you're on the ground there. Yeah. Oftentimes. It's one of the places you split your time between. What are you seeing? What are you hearing? How does that affect the industry? I mean, it's a story about infectious disease, and it's a story about people, but it's also a story that affects exports.
I mean, Ebola at the moment is concentrated in that northeast area around Punya, and it hasn't really spread, and it kind of self-contains itself, and over time it burns out. I mean, in 2014, mm-hmm. we were in the Ebola area of Guinea, near Nzerekore, where we were exploring iron ore. And again, as long as you sort of hygienic and you're not sort of getting involved in any way with the locals, and as far as sexual activity, as mm-hmm. far as it's all driven by semen, saliva, and blood. It's not an airborne disease.
Dr. Amish Adalja from the Bloomberg School of Public Health was on our program on Friday, and he reminded us about how, we hear about how it spreads, but he reminded us this is blood and bodily fluids.
Correct.
Is the way
exactly
that this spreads.
And one of the traditions in African culture, when the body dies, they wash it, and then they all hug the body. And the Ebola virus sits on the body. And that's one of the big issues in their culture of perpetuating.
But for you and for your business, not an issue?
No, it's not an issue, really. We've got all our staff are well aware of the risks. We run a program informing everybody of what to do and what not to do. Don't eat bush meat, don't eat bat meat, don't eat fruit that bats like because they urinate on the bat.
Does this current outbreak make you spend less time there? Or will you go back?
No, I'll go back. It's no problem. It's no problem.
Okay.
As I said, it's not an airborne disease.
Right.
If Ebola was an airborne disease, I'd be staying, a million miles away. But it's not an airborne disease. It's it's a bodily fluid disease. Mm-hmm. So as long as you avoid bodily fluids in whatever shape or form, you're okay.
Okay.
So it's not a huge risk.
I do want to end just going back to copper here and the role, how you see the U.S.'s role kind of playing into this, because are you seeing, guys, an increase in manufacturing and mining in the U.S.?
I can't comment on that because I don't know too much what's happening in the US. Sort of my if you want to call it expertise, is working in the DRC and finding high-grade copper assets that we can develop. But one advantage with us is we haven't signed any offtake or done any offtake agreements with anybody yet. So all our copper will be coming hopefully to the United States.
What's the way that you identify a deposit?
We identify the deposit normally looking at surface mineralization, where you look at the copper oxidization on the surface, and that's very, very visible in Congo. And I'll just run you through quickly how we discovered Butembo. We have a sort of way of discovering deposits in the DRC, whichever mineral it is, and our local team called us at our office in Lumumbashi and said, guys, you come up here, there's very interesting copper. And how it was discovered in that area of Butembo, the locals were digging from the top surface through the laterite and then through an oxidized mineral layer of copper. So you looked at about 10, 12 meters of ore, and they were panning for gold and getting very nice lumpy gold, 3, 4, 5 grams a ton out. But then at the bottom, they hit almost a layer of cement, of green cement, which was your solid copper. And then they'd move on to the next sort of 50 meters, 100 meters away, do the same, you'd hit the same. And it was over and over. So we then flew up there with our team, we bought in an excavator.
Right.
And we dug along strike 1.2 kilometers.
And you found it. Andrew Groves. Good to see you. Thanks for joining us.
Thank you very much.
Chairman of Copper Intelligence here in the Bloomberg Businessweek studio.
You're listening to Bloomberg Businessweek Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That is Emily Grafeo. She's from the Bloomberg News credit team. She has spent her career going across asset. We're talking stocks, we're talking bonds, we're talking crypto, and now she's in credit, and she's been working on some really cool stuff.
Yeah, it's been a very exciting time in the credit markets, Tim, particularly because of the AI trade. There's been some estimates that it's going to take like trillions and trillions of dollars of CapEx to build out data centers and all the other AI infrastructure. And a lot of that money is going to come from the credit market. So I've been enjoying that.
An interesting story last week. We talked about it with Silas on your team about Anthropic and, what it's doing when it comes to raising debt there too.
Yeah, that's a big one. That's a deal that, as we know so far, Apollo and Blackstone are running. It's going to be about $35 billion. Right now, we don't see any bank involvement in it. So this is what we could consider a private capital deal, a private credit deal, an investment grade one, likely. But it's just an example of a different part of the market that's being tapped to do these huge, huge deals.
Well, speaking of Anthropic, it's just the latest company to file confidentially for an IPO in a race with OpenAI. So maybe we will see it become a publicly traded equity at some point later this year. In the meantime, we're stuck with the public companies that we got, at least for now. And that's where Nora Melinda comes in. We're going to take a look at some stocks on the move today. I'm Tim Stanovic with Emily Grafeo. We're joined by Bloomberg Television markets correspondent Nora Melinda. What are you watching, Nora? There's a lot moving.
There's a lot to pick from today. I'm looking at some deal news. So I'm looking at shares of Taylor Morrison. They're surging for their best day since 2020. Now, this is after some news involving Berkshire Hathaway plans to acquire Taylor Morrison Home in an all-cash deal. It's worth about almost nearly $7 billion. Now, of course, we do know that Berkshire Hathaway does have involvement in the real estate space, but this is really underscoring the home building sector more broadly and an emphasis in that space for the company. We know the deal is expected to close in the second half of 2026, and it should unify Berkshire's site-built home building operations in a combined platform. So it'll be a pretty massive undertaking and a great deal for Berkshire, clearly.
Well, the first multi-billion-dollar acquisition under Greg Abel. He took over as Berkshire Hathaway after legendary investor Warren Buffett retired last year. Though homebuilder stocks have underperformed, mortgage rates have hit the highest going back to August. So it's an interesting move at a time when it seems like the housing market is really at a standstill.
Absolutely. If you take a look at S15 Home, that's an index that tracks some of the U.S. home builders. It's down about 2.3% so far year to date. We know that this is an industry that had surged prior to the rate hikes that we were seeing before. So interesting as you think about the broader landscape and how it affects the consumer and whether or not people are actually out there buying houses right now at this time.
Okay, and one company that's basically been on a straight ride up for the last several years is Nvidia, and it's on the move again today.
Yes, on the move again. Looking at shares of Nvidia right now, up about 6%, year to date, up 20%. But the news that we're looking at today and why the stock is rising for its best day since February, that's after the company unveiled a new AI-focused PC chip. Now, we know that Intel has pretty much had a strong hold on the PC market. Nvidia really coming in here, taking an aim at the company. Looking at shares of Intel, they are lower by more than 4%. Also, AMD, which we know is a competitor to Nvidia, shares also falling about 0.5%. So we'll have to see whether or not Nvidia is able to really make a major emphasis as we think about the artificial intelligence ramp up and what that means for the PC market.
We had a great chat with Ian King on Bloomberg Businessweek Daily today. You can check it out on our podcast feed. He covers semiconductors for Bloomberg News. And he talked about the promise of these AI PCs, these laptops, these desktops. The question, and I think that you were getting at this too, is like, what are we going to be doing with them that we can't do on our phones with these LLMs, at least right now?
Yeah, Ian mentioned using like Photoshop. I think he was talking about like simple ways that consumers can use it, but it seemed a little even too advanced. But still, that's like what I ask ChatGPT.
But that's a lot different than like looking at Instagram and doing like your online baking.
Yes, yeah, exactly. Yeah. Okay, we have one more tech name, Nora, on your list. IBM.
Yeah, shares of IBM up more than 7% right now. Now, this is after some online chatter. There was a video that resurfaced about 6 months old from back in December, a White House event that showed President Donald Trump praising the company. So as you really think about investors really looking at some of these speculative parts of the market and really where to place their money, we're seeing shares surging off of this resurfacing on the internet.
Wait, hold on. Shares are higher. Investors are buying shares of IBM because a video 6 months old of President Trump talking about IBM?
Wait, what was the video? Okay, what was in the video?
So it's from December, a White House event. It says that it recirculated over the weekend, and this is also including a post from Polymarket Money that racked up more than 700,000 views. So people are talking on the internet. They're saying buy the stock, and you're seeing shares higher off of that.
What times we live in, Emily?
Sometimes it's nothing more than that. Right? Chatter and sentiment.
Nora Melinda with today's Stock Movers. She is markets correspondent for Bloomberg Television. For more conversations like this, check out Stock Movers. It's a podcast. It's 5 minutes. You got episodes on the biggest winners and losers in the stock market. You check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts.